Interest rates are on the move again, this time on the downside with the Federal Reserve's recent vote to cut rates. So, what will this change mean for you in Colorado for your investments and your retirement savings? All important questions, and Barb and I get into all of that today.
Yeah,
Let's talk about the latest update on interest rates. And Barb, can you give us the headlines and recap all that for us?
sure. After about 4 years of steady rate increases, the Fed has now, voted to cut interest rates, which is a significant shift. They went with a cut in
Right.
September, and that was larger than the 0.25% that many had anticipated. And then in November, there's another opportunity for the Fed to either hold or cut rates, and it really appears that we're looking at maybe another 0.25% reduction. So I think it's important to really understand why rates had been so high in the first place, Ralph. And this was largely due to several rate hikes over the past few years to combat the surge in inflation that we were experiencing during and really even after the pandemic. Rates were increased aggressively to the idea behind it was to cool off the economy and bring inflation down to a more manageable level. And now with inflation starting to ease, the Fed feels that they can start lowering rates without risking inflation flaring back up again.
I've sort of simplified his quote, Barb. Jerome Powell, the head of the Federal Reserve, basically said in that recent news conference after they did the half point cut that the Open Market Committee believes that with the rate recalibration, the labor market will stay strong enough to move inflation as we close out the year. So, what's your reaction to what he said? Can you make any sense out of all that?
Basically, from what he's saying, it seems like the Fed has a fairly optimistic view of the economy's strength. And when Jerome Powell says that they believe the labor market will stay strong while inflation continues its decline, he's suggesting that the economy is now resilient enough to handle a rate cut without derailing the progress that they've made on inflation. And this is significant because lower rates can stimulate more borrowing and spending, which sometimes risks pushing prices up again. But by lowering rates, they're signaling confidence that inflation will keep moving towards their target and that the economy has stabilized enough for some loosening of the financial conditions. And he also highlighted the labor market as a key factor here. And he has said that unemployment remains relatively low, and overall, he feels confident that the economy can continue its current momentum, even with those lower rate environment. And all of this is viewed, and I put that in air quotes, as a cautious move, but one that indicates optimism about where things are headed. And Ralph, personally, I don't agree. I mean, I see many people struggling and jobs have been lost and homes are too expensive for people to get into and mortgage rates are still high. And it's hard to pay the bills and have money left over for food. And many people are not saving because they're just living month to month. So he sees something different than I do.